Use my gavel. Good morning. I'm going to call the meeting to order. My name is Peter Lawton. I'm the chairman of the board. I'd like to welcome everybody today. We have some formalities that I'm going to get through here quickly, and then we'll start with the application. The Wyoming State Bank and Trust regarding the Special Purpose Depository Institution Bank Charter application. Marie Castleberry, we will call the roll of the state banking board members. Oh, sorry.
Chairman Peter Lawton,
Present.
Joshua Sorensen,
Present.
Copper France,
Present.
Greg Dixon,
Present.
Brittany Sharp,
Present.
Robert Grady, Rod Jensen,
Present.
and then Fred Reif.
Present.
Thank you. I want to remind the board that as with all charter applications, the information provided to you contains a significant amount of confidential information. If there are any specific questions relating to the confidential information, the board will need to resolve itself into executive session. Per Wyoming Statute 13-12-115, the board shall render decisions on the charter application based solely on the 7 criteria. The board will reconvene at a later date to vote on the charter application. This meeting is being streamed live, so please be sure that your microphone is close to you and on so that you can be heard. We do have a court reporter here, so please make sure to speak clearly and not too fast so that he can follow along. Unless there are any other questions from the board members at this time, I will turn the meeting over to the hearing examiner from the Office of Administrative Hearings.
Good morning. I'm J.C. Demers from the Office of Administrative Hearings. I'll be acting as the hearing examiner this morning. The parties have prepared a joint pre-hearing stipulation, which I'll be using as a guide in the presentation of the case. And currently, the applicant has submitted exhibits 1 through 4, and the parties have stipulated that those will be admitted into evidence, so they're hereby admitted. The state, or the Wyoming Division of Banking, has offered Exhibit 8, and the parties have also stipulated that that would be accepted into evidence. So it's hereby accepted. I guess, Mr. Dykeman, I would start with you and ask you to please identify yourself and as well as Mr. Thompson.
Thank you, Mr. Demers. I'm Greg Dykeman of Longreimer Weiniger here in Cheyenne. I am local counsel for Ivanti, and I'm joined at council table by Chuck Thompson, who is the chief legal officer for Ivanti. I'll be asking most of the questions today, and Mr. Thompson will be testifying later. Thank you.
And will Mr. Thompson be presenting any of the case?
Only his own testimony. He may pipe up if there's a confidentiality request.
All right, and we've agreed at the pre-hearing that that would be fine, and Mr. Thompson's appearing in association with you this morning to the extent that that's necessary. Thank you.
That's correct. Thank you.
And Mr. Kenny, could you please identify yourself and? And then I guess if we could, starting with Mr. Reif, could we please just go down the table with introductions?
Good morning, Fred Reif, Interim Director, Wyoming Department of Audit.
Good morning, Greg Dixon with Hilltop National Bank in Casper, Wyoming, board member.
Good morning, Rod Jensen. I'm the new board member. I'm with the Bank of Star Valley in Afton, Wyoming, new board member.
Copper France, President, Bank of Commerce in Rollins, and board member.
Pete Lawton, Chairman, CEO, Bank of Jackson Hole, and board member.
Brittany Sharp, Vice President of Converse County Bank in Douglas, Wyoming, and board member.
Josh Sorensen, I'm a board member and non-banker.
And Mr. Dykeman, my understanding from speaking with you earlier is you're going to waive your opening statement and generally present Avanti's position through the testimony of Ms. Long. Is that correct?
That's correct.
And Mr. Kenny, did you desire to make any opening statement? No, I do not. Thank you. With that, please proceed.
Thank you very much. I'd call as the first witness, Caitlin Long. Please state your full name and your position with Ivanti.
Caitlin Long. Caitlin Long. Oh, swear again? That's okay.
You swear that the testimony that you're about to give in this proceeding will be the truth, the whole truth, subject to penalties and perjury?
Yes, I do. Thank you. Okay. Good morning, Mr. Chairman and members of the board. I'll start with a brief opening statement and then move on to our testimony, although the opening statement is formally part of my testimony. We're here to do something awesome for Wyoming today, which is to consider another applicant for the Special Purpose Depository Institutions, or speedy banks. Ivanti is a word that means forward or ahead in multiple languages. It stems from the Latin root abante, A-B-A-N-T-E. And Wyoming is indeed ahead as a state. We are building a niche financial services industry here, just like our neighbors in South Dakota and Utah have. Utah has the industrial loan companies, South Dakota has the credit card banks, and Wyoming will hopefully be home to the digital asset industry niche within the broader financial sector. Wyoming has a proud history of leading, obviously having invented the limited liability company in 1977, and also been the first state to grant women the right to vote 150 years ago. This whole initiative has always been about attracting jobs and outside capital and revenue to the state of Wyoming, as well as elevating the prestige of the University of Wyoming. And it's happening. Kraken is obviously the most visible example of it, but I know of some other big things that are happening outside of the banking industry, some of which will never be announced. One thing we can point to is Secretary of State Ed Buchanan's testimony at the Legislative Select Committee last week that the number of new business entities registered in Wyoming is up 75% year to date. There's been a huge spike. And there's also been a spike in the University of Wyoming's event. We just completed the first part of Wyo Hackathon, and attendance was up 11 times over last year. 4,400, nearly 4,400 attendees participated in the first part of the hackathon, as well as, which, by the way, the hackathon is a software competition, as well as attended the conference. And this was the first time that the law school put on a conference about Wyoming's blockchain laws. 4,400 participants attended, all of them unique participants from 97 countries. We're really proud of what's happened at the university and how much they have embraced what we're doing in this technology area. That event has helped raise in its first 3 years well over $1 million for the university. And I co-founded and remain chairman of that event. And I'm really proud with what the university has done to run with it, which is they have now founded a blockchain program at the university, one of only 12 universities in the United States to do that, joining MIT, Stanford, Cornell, Yale, and 7 other prestigious universities. So the seeds planted.
Ms. Long, Mr. Chairman, if I could just, I'm sorry to interrupt, Ms. Long. I just want the record to show it's Bob Grady. I was holding on the Google Meets line that was sent as our link for this. So I was waiting since 8:25, and just want the record to show I've joined the meeting and have been trying to be present since 8:30. So thank you, and look forward to the presentation by Ivanti and Ms. Long and the team. Thank you so much.
Thank you. And Ms. Long, I would ask if you could just slow down a little bit. I'm watching the court
Okay,
reporter
sure.
over here. Thank you.
Sorry about that. Thank you. Yes, thank you. Thank you, Mr. Chairman. We have joined MIT, Stanford, Cornell, Yale, and 7 other prestigious universities. So the seeds planted by the blockchain efforts here in Wyoming, which began in 2018, are growing into tangible results thanks to the dozens of people involved, especially the Wyoming legislators, Governor Mead and Governor Gordon, who realized that the upside potential from all this to the state far exceeded the downside risks. Kraken, of course, kicked off the banking aspect of this initiative in a very big way, thanks in no small part to all of you. I'm very proud of Kraken's success and helped recruit them to Wyoming over the last couple of years. To set the stage, Ivanti is very different than Kraken. Kraken is a consumer-focused company and a digital asset exchange primarily, whereas Ivanti is primarily an institutional-focused company, and we will be providing services around digital assets, but we will not be an exchange. Both Kraken and Ivanti share some important characteristics, though. We're both committed to blockchain technology and to doing right by the state of Wyoming, who gave us this opportunity. So we look forward to presenting our testimony, and thank you.
Could you please describe the Ivanti organization?
Yes, Ivanti is a depository institution that also provides trust services around digital assets and offers Avid, our proprietary new payment product. To be clear, all digital assets that Ivanti handles will be through the trust function of the bank, not on the depository balance sheet. Our target customers are institutions and consumers with a very high minimum balance. We will offer 4 product lines: online banking, custody of digital assets, the Avid product, and prime services for digital assets. At this juncture, it's important to pause and note that the Avid product is a proprietary product. Nothing like it exists in the market currently, and a patent is pending for it. We've spent a lot of legal fees on that product, and we respectfully request that any questions you have pertaining to how it works will be deferred to the executive session, as details about Avid are confidential trade secrets. Thank you. Ivanti's team consists of 13 full-time employees, team members, plus 6 advisors, of which 2 of the advisors are working for us part-time. 4 of the team already works in Cheyenne, and 2 are in the process of moving here. We project to have approximately 25 employees within the next 18 months, of which approximately 10 will be based here in Cheyenne, including 3 of our 5 executives. Ivanti's revenue model is fee-based because, of course, as you know, we are a non-lending charter. Ivanti will be almost entirely an online bank. We will have an office in Cheyenne to meet the statutory requirement, as my colleague Brittany Reddy will describe to you in her statement. Our executive team consists of 5 executives who are highly experienced in regulated financial services, and all are A players, in my opinion. I have worked with all of them previously, except for Brittany, who I got to know here in the Cheyenne community. Most of you know her and don't need me to tell you she's a star. Brian Bishop is Ivanti's Chief Technology Officer, and you will hear from all of the executives today. Brian is also a fellow director on the board of directors. We jointly worked together to provide a comment letter on best practices for digital asset custody to the Securities and Exchange Commission in 2018, and that's how I got to know Brian. He has the distinction of not only being a contributor to Bitcoin's open source code, but he also received the original email from Satoshi Nakamoto, Bitcoin's creator, in 2009. Brian was previously the lead blockchain engineer at LedgerX, which is the first Bitcoin derivatives exchange that was licensed by the Commodity Futures Trading Corporation, or CFTC. Brittany Reddy is our Chief Financial Officer and Chief Banking Officer. She has held every senior position in Wyoming community banks during her nearly 20-year career in banking in Wyoming. She has also negotiated and implemented core banking software systems multiple times in her career. As Ivanti's most experienced executive in traditional banking, she works very closely with all of the other executives and has been instrumental in melding a technology-forward company to banking regulations and practical realities. And she has come up to speed very quickly on digital assets. Zev Shimko is our Chief Operating Officer. Zev and I worked together at Morgan Stanley while he was beginning his career, and he was literally a star fellow. That's the name of Morgan Stanley's program for its top-rated junior employees across all of the company. We covered corporate treasurers together at Morgan Stanley, and a few years ago, we separately both left Wall Street for startups in the digital asset industry, but we stayed in touch. Zev is an expert on the market structure of digital assets, especially trading dynamics, and he will walk you through Ivanti's proposed products as well as the product to market fit. And lastly, Chuck Thompson, to my left, our Chief Compliance Officer and Chief Legal Officer. Chuck is also an alumnus of LedgerX, where he worked with Brian, as well as an alumnus of Morgan Stanley, where we did not cross paths but worked with a number of the same people at different times. Chuck and I first met at a conference for asset-backed securities in 2017, and we immediately found common ground on the legal issues facing the digital asset industry. At LedgerX, Chuck built its Bank Secrecy Act and anti-money laundering compliance program, and I knew that that experience, as well as his deep securities experience at Morgan Stanley, as well as many years at two of New York's top law firms, would be invaluable to Ivanti. Next, let me turn to our capital raise. We are a de novo applicant, and our strategy was initially to raise the statutorily required minimum before we clear regulatory hurdles, and to wait to do the big capital raise required in order to open for business until after clearing as many of those hurdles as possible, which is how many de novo banks have recently been funded in the United States. The reason de novo banks are doing it this way and sequencing their capital raising in such a careful manner is to reduce the risk to investors that the de novo applicant does not receive its charter. If Ivanti does not obtain our charter, we will be unable to operate and will not open. So the roadmap is to raise the statutory minimum plus some working capital up front, which we already did, and then to execute the bigger capital raise after the regulatory risks have been significantly reduced. And we have worked extensively with the Wyoming Division of Banking on this capital plan, and Brittany and Zev will be discussing that with you during their testimony. Ivanti's mission is to build a compliant bridge between the legacy and the decentralized digital financial world, and to expand access to the open financial system based on direct ownership of assets in a way that is more stable, secure, and private than the legacy system. Our motto is both security and compliance first. We are committed to rigorous compliance and security in everything we do, and our employees are trained on this mission from the moment they start working here and again during their reviews. Lastly, let me close this section by thanking the two Wyoming banks who helped Ivanti get started. We are not mentioning vendor names in today's hearing testimony. They know who they are. Ivanti faced trouble getting a bank account and getting off the ground, which is very common in the digital asset industry. And I want to especially thank the banks who helped us, because we attracted outside capital from outside of Wyoming and wanted to keep it inside Wyoming, instead of sending it right back out to one of the out-of-state banks that services this industry. And thanks to the local folks, we were able to do that.
Could you please explain to the board your qualifications and background?
Yes, thank you. I bleed brown and gold. I was born and raised here in Wyoming, in Laramie. My father was a UW professor for 40 years in electrical engineering, and my mother was a school teacher, first in Lander and Riverton, and then later in rural Rock River, population 252. I'm a product of Wyoming's public schools, graduating from Laramie High School in 1987, from the University of Wyoming in 1990, and then received a law degree and Master of Public Policy from Harvard in 1994. By then, I owed more in student loans than my parents' house in Laramie was worth, and I wanted my parents out from under that obligation as fast as possible, so I took a job on Wall Street. Although I never practiced law, I am a member of the New York Bar and remain so today. I ended up staying on Wall Street for 22 years, from 1994 to 2016, and was most recently head of Morgan Stanley's Pension Solutions Group and Corporate Strategies Group in New York. Here's the chronology. I cut my teeth in the financial institutions group at Solomon Brothers, working on bank mergers for a few years, and then switched to equity research and joined Credit Suisse in 1997. By 1999, I was the lead equity research analyst for the initial public offerings of insurance companies MetLife and Manulife of Canada. MetLife at the time was the largest initial public offering ever done in the United States. And I also worked on a wave of many similar complex insurance company conversions from mutual ownership by their members to publicly traded ownership by shareholders. During that time, I was promoted early to managing director, which is the equivalent of partner. In 2002, the then chief executive officer of Credit Suisse Group, John Mack, asked me to move to Zurich to help restructure Credit Suisse's troubled insurance subsidiary in Europe. The insurance subsidiary's balance sheet needed to be massively de-risked, its interest rate mismatch closed, and the business readied for sale. After spending nearly a year in Zurich, working as a direct report to both John Mack and the co-chief executive officer of Credit Suisse, Ozzie Grubel, I returned to New York, and between 2003 and 2016, started or co-started 3 new businesses inside the big banks, 2 at Credit Suisse and 1 at Morgan Stanley. These businesses were life insurance premium finance, variable annuity reinsurance, and pension solutions. And here is some important context about my experience with these 3 startups. Each of these businesses was established after completing a long and intricate new business approval process inside the big banks, obtaining sign-off from several departments, including the legal, compliance, regulatory controllers, financial controllers, corporate treasury, internal audit, technology, operations, and reputation risk departments. I think that's all of them. Each of these businesses also created value where others just hadn't seen it yet. At bottom, they were all very simple ideas, but seeing the opportunity required a detailed understanding of the intersection of applicable legal, regulatory, and accounting rules. That's a theme that we're repeating here at Ivanti. Each of those businesses was a startup that operated within the big bank's infrastructure, but was standalone profitable after cost allocations. The revenue model for the latter 2 was purely fee-based, and the other one generated high risk-adjusted returns on the bank's allocated capital. Again, in context, during those years, I had primary responsibility for 3 regulated financial institutions that were wholly owned subsidiaries of the banks, including 2 Bermuda reinsurance companies while at Credit Suisse, and a Texas-domiciled life insurance company while at Morgan Stanley. Representative clients of these 3 startup businesses included MetLife, General Motors, Verizon, Bristol-Myers Squibb, Motorola, JCPenney, Timken, and other large companies. So to sum up, I have not run a bank previously, but I have run regulated financial institutions, have been responsible for signing regulatory filings, including audited financial statements, and interacted heavily with regulators. And I anticipate the Texas Department of Insurance's triennial regulatory exam process will be similar in breadth and depth to what Ivanti will face with our supervisors here at the Wyoming Division of Banking. Next, let me turn to blockchain, Wyoming, and the path to forming Ivanti. In 2012, I came across Bitcoin while I was at Morgan Stanley. Like almost everyone who comes across Bitcoin, at first, I did not think it would succeed. By 2013, I took time to really learn about it and started attending Bitcoin meetups and conferences on weekends and after hours, and then started buying it personally. In May 2014, Morgan Stanley was hosting the corporate treasurers of the largest companies in the United States, the Fortune 20 companies or so, and the treasurer of one large company who was co-hosting selected Bitcoin from a list of topics about which she thought her colleagues would be interested in hearing a presentation. So I drafted that presentation about Bitcoin with Morgan Stanley's logo on it. In May of 2014, it went all the way up to the head of compliance for approval, and they approved it for release in this small private setting in May of 2014. The interest level and engagement from those corporate treasurers was very high. And many of them faced real challenges moving money around the world, especially in countries without well-developed banking systems. And some of them correctly spotted that Bitcoin could become a useful solution for them. Some of them followed up, and in a few cases, we have continued to talk about Bitcoin from that meeting in 2014 until today. This experience is relevant for Ivanti, where we are targeting the corporate treasury market as one of our target markets for Ivanti's payment solutions. Back to the chronology, though. By about late 2014, Morgan Stanley's chief technology officer called me to talk about Bitcoin and blockchain, which was by then garnering significant attention in Wall Street's technology circles. Net-net, in addition to my day job in pensions, I ended up one of the 5 people on Morgan Stanley's blockchain working group, along with its CTO, Chief Technology Officer, as well as its head of operations and 2 senior executives from trading. We vetted the myriad startups that were contacting Morgan Stanley almost on a daily basis by then. I'm grateful to the CTO because he was such a skeptic about this whole technology. And in fact, that pushed me to dig deeper. And the deeper I dug, the more I realized this is going to be a solution to the very real problems my corporate clients were experiencing with the settlement systems in both mainstream payments and securities. Those are the very problems Ivanti is trying to solve, and I'll share more about them shortly. By 2016, I was all in on blockchain, leaving Morgan Stanley and joining Symbiont, an enterprise blockchain startup in New York, as president and chairman of its board. That year, in 2016, I connected with the innovation team at asset management giant Vanguard, which took an important step with Symbiont toward implementation of blockchain technology in securities markets by completing a pilot project in 2017 that I co-spearheaded. That pilot went live last year, and Vanguard is now using Symbiont's blockchain technology in production in a mission-critical application. I left Symbiont in 2018 and remain very proud of the team's success. But as that Vanguard pilot project was proceeding in 2017, something else important was happening. Bitcoin's price was soaring. And a lot of the mainstream world was beginning to take notice that perhaps there was something special happening here. For example, Fidelity's chief executive officer, Abigail Johnson, that year announced that Fidelity had already been experimenting with Bitcoin for a few years by then. And those Bitcoins I'd started buying in 2013 had become pretty valuable. So I called the UW Foundation and started the process of establishing another endowment at UW by donating appreciated Bitcoin to fund scholarships for female engineers in my father's memory. I'd seen how hard it was at Symbiont to find female engineers to hire, and noticed that they often commanded premium salaries in the market. But the UW Foundation ran into a problem. As a Wyoming corporation, none of the digital asset companies could do business with it due to Wyoming's money transmission law, which required the service providers to hold a dollar-for-dollar reserve in addition to the value of the Bitcoin they were transferring, thereby forcing them to do business at a loss, and so they had all pulled out of Wyoming. Therefore, the UW Foundation was not able to find anyone who could liquidate the Bitcoin I wanted to donate back to dollars. I could not believe that Wyoming was one of only 3 states in the United States that had that problem with similar laws and in which the digital asset companies could not operate. So I volunteered to help fix the problem. A college buddy introduced me to Representative Tyler Lindholm, who had tried to fix it during the previous legislative session, and that was the germ of the Wyoming Blockchain Coalition, which was a crowdsourced, all-volunteer effort. Representative Lindholm asked me to spend that legislative session in Cheyenne, helping make the case to legislators, which I did. And then he kept pushing me for more and more ideas. He wanted to help Wyoming's economic development, and he understood the real economic development potential for Wyoming by attracting a niche financial services industry here, just as South Dakota had done with credit cards in the early 1980s. And now there are 16,000 jobs in the credit card industry in South Dakota. I'd understood all this too, as I've always called Wyoming home and maintained very close ties here, even while I was living in New York for 25 years, including serving 2 terms on UW's foundation board, as well as spending 2 decades, along with Greg Dykman, on the Arts and Sciences Board of Visitors at UW.
Could you please tell the board about some formative experiences that revealed the problems that Ivanti is now trying to solve?
Yes, thank you. The pension business at Morgan Stanley was predicated on a seemingly simple idea: transferring ownership of financial assets and liabilities from one party to another on the same day. But oh boy, was that far from simple. Those pension transactions involved the same-day settlement of the transfer of ownership of billions in cash and securities from pension plans to life insurance companies in exchange for an annuity. We had a massive problem to solve. All of the assets absolutely had to transfer on the same day. If even $1 of the transfer failed, then the entire multi-billion-dollar transaction would have been deemed illegal. It would have violated either the regulations governing the pension plan or the regulations governing the insurance company, or both. But here's the problem. As you know, securities settle 3 days after the trade date, 3 days back then, 2 days now. And transferring private equity can take weeks or even months in order to settle. Remember, absolutely everything had to settle on the same day. And even cash, it turns out, might fail to settle on the same day, given all the approval procedures required in order to send a multi-billion-dollar Fed wire between 2 non-bank counterparties. To figure all this out, I had to dig very deeply into the plumbing of the financial system. And what I saw caused me to dedicate my career to finding a better way, a better, faster, and less risky way to settle the transfer of ownership of financial assets. Successfully achieving the same-day transfers required a small army of people, literally about 200 people, required months of dry run practice for this to orchestrate it all in perfect sequence, required writing a procedures manual with screenshots of exactly which market metric to rely on at precisely what time of the day, with detailed contingency plans if something went wrong. And in one case, we even had to involve the Federal Reserve Bank of New York to ensure that a multi-billion-dollar Fed wire between two non-banks went through without a glitch. One formative experience during that time pertained to the seemingly esoteric but really important and very real question, what is cash? Is a bank deposit really the same thing as cash? When my client agreed to make a multi-billion-dollar cash payment, what did that really mean? Was the client supposed to deliver semi-trucks filled with $100 bills? We actually asked that question. Or make a commercial bank transfer via FedWire. But is a commercial bank transfer really a cash transfer? Who shoulders the counterparty risk if something goes wrong? In other words, what would happen if one of the two commercial banks failed after the FedWire transfer were initiated from the payor, but before the wire was received by the payee? We were talking about billions of dollars of cash. I'd actually seen a different client's previous large payment get lost temporarily when it was supposed to go through 3 central banks in one day and didn't end up in the payee's bank account. It took days to find the lost payment, and the corporate treasurers and their bankers lost a lot of sleep. But thankfully for these pension transactions, a template for how to do all of this smoothly was set by that first company who executed it in November 2012, and that template has been repeatedly used by others since then. In that first transaction, my client's pension fund successfully transferred $29 billion of assets, literally thousands of dollars of different assets, to the insurance company on the same day and with settlement finality. Again, that took 2 years to figure out how to do something that should have been very simple, allowing two willing counterparties to transfer financial assets on the timeline they both needed to use, which for different regulatory reasons in their case was the same day. These experiences left me wanting to find a better way and to connect the dots. All this was happening right as I was learning about blockchain technology, which helped me go down that rabbit hole. And it was becoming mainstream at that very moment that I was experiencing all those painful problems with the traditional financial system. It turns out blockchain is indeed a very real solution. It offers the adult version of the way kids trade baseball cards. They both hold on to both baseball cards, and then they both let go at the same time. The kids have it right. It's the adults who made it complicated by adding all these delays and not settling at the same time. And it turns out that we have the technology now to enable customers to design their transactions for what they need, to settle them as fast or as slow as they want, and program to reflect whatever preconditions they choose to agree to. There's a reason why the digital asset industry is on the forefront of innovation in this area, because necessity is the mother of invention. As Zev will explain shortly, settlement risk is rampant when a digital asset is exchanged for a dollar. When a service provider delivers the digital asset to the customer and receives dollars in exchange, usually via the automated clearinghouse or ACH payment, the service provider faces a huge risk. The customer, as you know, can claw back that ACH payment, but the service provider cannot claw back the digital asset. Once they deliver the digital asset, it's gone. It cannot be retrieved. It has settlement finality, usually in minutes. But the ACH payment doesn't settle, usually for days, and may not have settlement finality for 60 days or potentially even longer. This fundamental mismatch in both the settlement timing and the settlement finality creates Ivanti's business opportunity, which is what our payment solutions solve. As one of Ivanti's probable first customers in the digital asset industry told us, we need your product yesterday. But Ivanti's ambitions go well beyond servicing only the digital asset industry, As you'll hear from the recently retired treasurer of Ford Motor Company, as well as the recently retired head of Ford's Treasury IT team later today, IT, information technology, this product should be commercializable into mainstream payments as well. It provides the missing piece in the puzzle of solving payments in the corporate treasury market. I wanted to share all of this background with you because it hopefully gives you some important understanding of the problems that Ivanti is trying to solve. There is a lot of capital tied up in unsettled financial transactions at any given moment, which could be freed up and redeployed to better uses if customers could settle transactions simultaneously at exactly the moment that they choose to schedule. For example, in 2014 at Morgan Stanley, I worked on a project with a mid-sized computer manufacturer of hardware that has a global supply chain. And we quantified that if that company could move cash between its own subsidiaries around the world on the same day, this is its own money, that would free up $200 million in cash trapped on its balance sheet to cover those unsettled payments. And this was just one of our smaller clients. So there is a profitable business to be built by helping customers fix these settlement problems because the customers have huge efficiency gains from doing that. Ivanti's business plan is designed around unlocking these efficiency gains for customers and the users of our platform. All of our products are designed to solve real problems, and they're all critical pieces of that platform, from online banking to Avid, to custody for digital assets, and to the prime services around digital assets for creating liquidity in them. Thank you.
Does Ivanti have a board of directors?
Yes, we have already constituted a 5-member board and have been meeting on a monthly basis since June. All directors have already received training about the responsibilities of being a bank director and have been following these formalities, despite the fact that, of course, Ivanti is not yet a bank. So that transition will be smoother if indeed Ivanti is granted a charter.
Could you describe the board's composition and its committees?
Yes, the board consists of 5 directors. 2 are insiders, Brian Bishop, our Chief Technology Officer, and me. And there are 3 independent directors, Dick McGinnity, John Petway, and Philip Trike. Dick could not attend today, but you will hear from John and Philip later. And since Dick cannot attend, I would like to get his background on the record. Most of you know him. He is President Emeritus of the University of Wyoming, a longtime venture capitalist at his own firm in Boston. He has previously served as a director of a bank, and prior to that was a professor at Harvard Business School. His specialty is business ethics. Our board meets monthly, and we communicate via email or conference call approximately once a week. Ivanti's entire executive team participates in each board meeting to enhance the flow of information between management and the board. The board is very engaged. The directors ask many probing questions, and they have also been actively involved in strategic discussions, as Ivanti has received multiple incoming strategic inquiries already from both banks and non-banks. We share that information with the directors shortly after we get those calls. I'm the chairman of the board, and as that responsibility, I set the agenda as well as host the board meetings. However, the independent directors meet always in executive session at every board meeting without Brian or me present, or without the Ivanti executives present as the last agenda item of every board meeting. We designate a corporate secretary and take formal minutes at each meeting, and then formally adopt those minutes as part of our regular process. Chuck Thompson is the appointed secretary of the board, and Brittany Reddy and Greg Dykman, here, our outside counsel, are also assistant secretaries of the corporation. 2 of the directors, as I mentioned earlier, have prior experience as directors of banks, Dick McGinnity and John Petway, both of whom also have extensive venture capital experience and have served on many corporate boards. John Petway is also a certified public accountant. So in addition to his prior bank director experience, he is well qualified to chair the audit committee of the board. The board has 5 standing committees, and all 5 members of the board are currently members of each committee. And I'm sure you're familiar with many of these committees: the executive committee, the audit committee, the digital asset committee, the information technology committee, and the Bank Secrecy Act / anti-money laundering committee. So in summary, we have experienced people working in and around Ivanti's board. The board is already functioning largely as if it were the board of a bank. And between the prior experience of Brittany, Greg, Dick, and John, I believe the board is ready to make the formal transition to being a board of a bank.
Will Ivanti be competing with Wyoming banks?
No, it's very unlikely we will compete with local banks for 3 reasons. First, Ivanti will be focusing on digital assets. Second, Ivanti will be serving primarily large institutional customers for digital assets, such as hedge funds, pension funds, endowments, family offices, and the treasurers of large corporations. And third, the consumers that we do plan to serve will be required to have very high minimum balances. These 3 characteristics have no overlap with most of Wyoming's banks, and where there may be overlap in the customer base, i.e. serving institutions or high net worth individuals, the existing Wyoming banks generally do not serve that customer base for digital assets. We are open to creating partnerships with Wyoming banks, as we expect they will have digital asset needs in the future, and we will likely need to utilize some services from them, as we are not a full-service bank ourselves.
As a fee-only bank, how do you intend to make money?
The key drivers of our business are 4: asset growth on our platform, transaction volume on our platform, managing our fee schedule, and keeping our expenses low. You have already seen from Kraken's application how profitable a fee-only digital asset-based business can be. Although Kraken is in different business lines, margin opportunities in this industry are significant, and Brittany and Zev will shed more light on this question in their presentations.
What are the biggest risks to achieving your financial projections?
The biggest risk that Ivanti faces to achieving our financial projections are 2. First of all, not achieving our asset growth targets, and second, margin compression, either from reduction in revenues or expenses being too high. As you will see from our financial projections, though, our base case is achievable based on the direct precedents in our marketplace. I think it's actually conservative. And we can walk you through our reasonableness check during the executive session if you're interested in that.
Has Ivanti hired outside counsel?
Yes, although we're not naming vendors today, you have the names of the law firms in the stipulation. Obviously, you know Greg Dykman is our local counsel, and we have engaged both a top New York law firm with significant expertise in banking and regulatory and commercial law as our product and federal regulatory counsel, as well as a top boutique law firm in digital assets, also based in New York. Although not listed in the stipulation, we should add that we engaged one of the top law firms in the United States for our patent application for Avit, and this law firm also happens to have significant expertise in digital assets.
Did outside counsel review the legal structure of your Avit product?
Yes. There is an extensive write-up of the legal structure of Avit in Ivanti's business plan, which you have in front of you. It was prepared in consultation with our product counsel, which again is a top New York law firm with significant expertise in banking and commercial law. Again, as this is proprietary and confidential information, we would ask to discuss this in further detail during the executive session if you would like to pursue that further.
Do you intend to comply with all applicable Bank Secrecy Act, anti-money laundering, and related laws, rules, and regulations?
Yes. You will hear that Ivanti already has 3 very experienced compliance people on our team, and I will refer back to our motto, security and compliance first.
Thank you, Ms. Long. I tender the witness for questions.
And Mr. Kenny, it's my understanding that the division's going to rely on presentation of its case in chief as opposed to cross-examining any of the witnesses. Is that correct? Yes. Thank you. And I'd just like to take a moment. There have been numerous references to an executive session. And at times, the State Banking Board, in fulfilling its obligations to the public in reviewing an application, needs to inquire into information that may be protected as either a trade secret or proprietary information, or could relate to issues of security that, if they became public, would cause problems in terms of securing the financial institution. Additionally, some information may just be protected by law. And in the event that they desire to inquire into those type of matters, we may be asking to hold a non-public session, or what's commonly referred to as an executive session. And Mr. Chairman, speaking with Mr. Dykman at the pre-hearing, he indicated that it would be his preference to address all the executive session type or non-public type questions at one time, as opposed to doing it piecemeal. I think that'd be in the interest of efficiency in conducting the proceeding, and I'll just ask for your input on that.
Yeah, my suggestion would be again at the end of the presentations, so then we start with the executive session at that point.
Very good, thank you. And in terms of questioning, I would ask that we please start with the chairman, then proceed to Mr. Reif, and ultimately finish with Mr. Grady. Thank you. Mr. Chairman.
I just had I appreciate the presentation. It was a lot of great information and it helped a ton to understand it. But I'm just curious, and I don't know if it goes back to competition, but you talked about, I thought I heard working with trusts also. Did I hear that, or did I misunderstand that?
No, Mr. Chairman. However, we are interested and open to the potential to work with trust companies, and a few trust companies have reached out to us where we would potentially provide digital asset custody services to their customers as for example, as a sub-custodian.
Okay. And you also talked about deposits, but mostly it's fee-based, so I'm trying to understand how the deposits would play into this.
Sure. To be clear, Mr. Chairman, the deposits are U.S. dollar deposits. They are not digital asset deposits. I think everyone on this committee is aware of the difference between the trust function and the deposit function of a bank, but it's important to get that in the record. We will not be paying interest on deposits because we will not be generating much interest income, if any, on the asset side of our business. As a result of being the special purpose charter, we are required to invest only in high quality liquid assets, which don't generate much yield. Right. So from a deposit perspective, really what we're interested in is working with our existing customers who will also be working with digital assets and/or our payment products. So that is a necessary building block to the business. It is critical that we be a deposit-taking institution, but it is not a big part of our business. And from a competition perspective, the traditional banks should easily be able to beat us in paying interest on deposits.
Okay, thank you.
Good morning, Ms. Long. Thank you for the testimony. It was eloquent and established a good foundation. So appreciate that, along with the comprehensive application. Maybe to dovetail on the chairman's question just a little bit, you mentioned in your presentation that the bulk of your work is going to be using your trust powers. And so would you just walk us through where that comes from in 1312?
Yes. 1312 is the statute that provides, that creates the special purpose depository institution charter. I don't have the precise statutory references. Perhaps when Mr. Thompson testifies in a moment, he can provide the precise statutory references. But what the statute does is enables the bank charter to take deposits of dollars but to handle digital assets through its trust powers. This is incidentally very different than a new type of bank charter that has been granted in Switzerland, where in Switzerland, the banks can actually take deposits of digital assets. Now, in Switzerland, of course, they're used to dealing with foreign currencies all the time. So essentially, the regulator in Switzerland, FINMA, looks at digital assets as if they're just another type of currency. But to be clear, the statute in Wyoming only allows the special purpose depository institutions to touch digital assets through the trust powers, not on the bank's balance sheet as deposits. As a result, it probably is helpful for you to think of what the balance sheet of the big custody banks in the securities industry look like. State Street, Bank of New York, for example, have relatively small deposit bases on balance sheet, but the trust assets in which they provide custody services, their assets under administration, are many, many, many multiples of the deposits on their balance sheet. And I would not be surprised if Ivanti looks very similar.
Thank you. Maybe in just broad terms, because you've already talked about it, and I think others will after you as well. But you know, historically, banking in Wyoming has been traditional community banks. And we know the lane that banks in Wyoming operate in. The creation of the Speedy Charter is already pushing the envelope and going in a different direction, alongside but different. And I'm not suggesting that's good or bad, but your application states that you've complied with all of that. But by that nature of what you're doing, you're also testing and pushing many other boundaries, as you've described in your testimony today. And again, I appreciate that testimony. Could you just talk to us a little bit about the comfort level we should have of this bank operating outside of this traditional path we've seen, that we can anticipate that you will be successful in your endeavor?
Yes, thank you, Mr. Reif, and members of the committee. It is a very different bank. I know you know that because it's non-lending, and therefore its profits come from a very different part of the business. It's a fee-based bank. As a result, the risks are really quite different. The normal risks of a traditional bank include credit risk and interest rate risk, as all of you know very well. And because Ivanti and the special purpose depository institutions are not permitted to make loans, they cannot earn yield by taking prudent credit and interest rate risk. And as a result, the operating risk is really the largest risk for the special purpose depository institutions. Brittany Reddy will go into this in much greater detail in a moment, but that's probably a good introduction to how different it is. We have different operating risks for sure. We have some of the same ones that all of you do: the core banking system risk, the compliance risk, the procedures relating to the release of customer cash. But interestingly, the way I think about the custody of digital assets is really not that different than the way a traditional bank would think about vault cash. That is an asset that could walk out the bank, outside the bank, if someone actually does get access to it. So the physical security around the storage of that is of utmost importance. And for a few hundred years, banks have built physical security around vault cash. It's not foolproof, but digital assets are predominantly stored offline, and so the physical security of the storage of those is really not that different than the physical security of the vault cache. The additional operating risk comes in when the digital assets are online. That's when the operating risk that the special purpose depository institutions have is greater than the operating risk of a traditional bank. And both Brittany and Zev will talk about our strategies for mitigating that risk and also for ensuring it. Thank you.
Thank you. One more follow-up, if I may, and related. That's helpful. On the other side of the equation is your relationship with the regulator, in this case, the Division of Banking, who doesn't have either the co-equal partner like a Federal Reserve or an FDIC. Will you talk a little bit about your relationship with the regulator and how you see this going forward? Because again, that's not the traditional path the Division of Banking has been on. And so how are you all going to work together to make this successful in the long term?
Yes, thank you, Mr. Reif. This is a good question. I have been working very closely with the Wyoming Division of Banking since the germ of the Special Purpose Depository Institution idea, which I remember talking about with Commissioner Faulkner in July of 2018 at a blockchain task force meeting in Jackson Hole. And there's been so much work done to get to this point, including developing the expertise on the Wyoming Division of Banking's board, as well as introducing them to the service providers who can help them not only learn about digital assets, but more importantly, create a supervisory manual and supervisory program to supervise digital asset providers. What is interesting about this is it was coming. It absolutely was going to be picked up by a bank regulator somewhere first. And that's the opportunity that Wyoming had in being first. As you probably are aware, the national bank regulator in July released the first of a series of interpretive letters allowing national banks essentially to copy the Wyoming Special Purpose Depository Institution's powers in this area. It's not that easy, though, for a bank regulator to allow banks to get into new businesses like that, because of course rules have to be promulgated and a supervisory manual has to be prepared. That all took more than 2 years in Wyoming's case. I think from an outsider's view, this looks like it might have come out of left field if you weren't paying attention in Wyoming, as we all were. But in fact, actually, this has been underway for more than 2 years. And I do also know that, from helping to promulgate the rules, you'll hear a little bit about the rules today. Those were put together by an advisory group that included a significant number of digital asset industry participants and outside attorneys and a consumer advocate. It was fun to watch the consumer advocate working with the group to try to ensure that the industry, which wanted certain things, and the consumer advocate, which wanted others, pushing back to get to a place. There were some very heated discussions about what is the obligation of a digital asset service provider when there's something called a fork in the network. A fork in the network is probably easiest thought about as a stock dividend. You're getting a new share of stock that is attributable to the ownership of the original share of stock. That's the easiest way to think about it. There's value to that. Whose value is that? And Wyoming, in the rules, was very clear. That value belongs to the customer. That value does not belong to the service provider. And in fact, one of the issues in the digital asset industry is that the service providers have held on to that value because they didn't promise that they would give it to the consumers. It's a consumer issue. So that's an example of the type of discussion that we had. And it was very robust. It was a many months long process just to draft those rules before the rules were adopted. And then Commissioner Faulkner will obviously share the work that's been done on the supervisory manual. As an applicant, we've been kept abreast of the timing of that manual, and we've been told we will shortly be receiving the Bank Secrecy Act and anti-money laundering portions of that, so we can fully make our program consistent with what is expected of us in that process. And I would just wrap up that comment by saying we are at least 2 years ahead in Wyoming of the national bank regulator. They got a lot of press by putting those interpretive letters out. And in fact, actually, we have received inquiries from national banks who want to work with us as a sub-custodian. They are coming in this industry. And the Wyoming banks, because they are banks, are the preferred partners to work with the mega banks in this industry, because we're ready. Thank you.
Thank you for your testimony, Ms. Long. I don't have any questions, but certainly appreciate you helping educate and continue to educate all those parties involved. So very well assembled and articulate testimony. Thank you.
Thank you.
Thank you so much, and I loved your business plan. It was informative, and may I say on my base, educational. I greatly enjoyed it. My question evolves around your prime services strategically after probably the first 3 years. You specifically list on page 6, and then in greater detail on page 11, prime lending consumer digital assets as trustee. My question is this a DeFi or decentralized finance program? What would you expand on lending assets as a trustee or matching assets, and how that process will work, and what Ivanti's role would be in the lending program? Thank you.
Yes, thank you. I'm glad you asked that question because we are a non-lending charter and you're mentioning the word lending. And that's an obvious case where it needs a clarification. To be clear, Ivanti cannot lend, and the lending of customer deposits is absolutely prohibited by the statute. So how does lending even come up in a business plan for a charter like that? It pertains only to the trust function. And the best analogy is how the State Streets and Bank of New York's of the securities world work. They custody the assets, the securities, for their clients, but sometimes their clients direct them to go out and earn income on those securities by lending them. In those cases, they probably lend on a principal basis. I don't know for sure, but of course, Ivanti would not be able to do that. We are only able to work as an agent in providing those services to our customers. And for those of you who are sensitive to the legal structure, that would be as a directed trustee only. So we cannot go out and lend customers assets unless the customer specifically directs us as trustee to do so. Again, it would not be Ivanti's own capital. And both, actually, I think all three of the next executives you'll hear from will be talking about this to clarify that lending, first of all, is not a product that we intend to introduce right away. It's something for down the roadmap. But we do estimate, given what has happened in this industry, that we will have to offer that service. And so just to wrap up, we would be a platform where lenders and borrowers can meet. The lenders, of course, would be the lenders would be those who post collateral through their trust deposits of digital assets on our book, and then the borrowers would be those that want to come in and borrow the Bitcoin for their own use, just as a securities lending program would work, where you'd have an outside borrower come in wanting to borrow the customer securities and paying them a yield for that. I should mention, there are traditional banks that are lending against digital asset as collateral. It is a profitable business. And one of the inquiries we had is by a bank that wants to be the lender of record for our platform, to the extent that we actually do have customers who are interested in lending out their digital assets on deposit in our trust department.
Thank you for that answer, and may I follow up? So
Yes.
basically, it's the Ivanti's role is not in credit underwriting in any way in this match, but rather just being the vehicle of the match. Would that be correct?
That's a great summary. Better summary than mine. Thank you.
Ms. Long, thank you for your testimony. To some degree, I guess, a comment to the lending is, I think traditional banks also facilitate that vehicle, only it is a little bit different. And so I do believe there is some, and I look forward to further testimony for clarification on that, because to me, that line right there is we're towing that line. And it's very concerning to me that this, with respect to this SBDI charter, that we don't cross that line or don't approach that line based upon the nature of this. On another note, you talked about your target audience being high net worth individuals, excluding customers with, less than a very large amount of deposits. Traditional banks under the FDIC are subject to CRA guidelines, which certainly apply to lending. We're also subject to the CFPB and consumer protection laws that, that really strongly guard against redlining and those types of practices. Can you talk to this and help us understand maybe how your institution looks at this, views this, and maybe any consideration, either regulatory-wise or reputational-wise, that could come as a result of targeting only high net worth? And I understand your prime target is institutional, and those rules are different than consumers, but you also have indicated that you will be also targeting consumers. So if you could just talk to that, help us understand kind of how you and your company view this type of practice.
Yes, thank you for the question. Yes, indeed. We had a big conversation in the beginning with Brittany Reddy about whether we even wanted to serve consumers at all. Our primary customer base really is institutions. And we elected to go ahead, knowing full well that the regulations that you're alluding to come into play, especially the CFPB, the Consumer Financial Protection Bureau regulations come into play when the moment we start servicing an individual customer as opposed to an institutional customer. But what we learned is that a number of the family offices who are actively trading digital assets and who are literally just holding digital assets as long-term assets, some of them actually really do prefer to operate as individuals. And so by not serving consumers, we wouldn't be able to service those who do act as individuals as opposed to through a trust or through a limited liability company or other business entity structure. So we elected to go forward. Our way of handling the compliance is to limit the value to very high minimum balances. We are not staffed to handle a more mass market consumer. And our initial plan is to focus on institutions only. But the moment we open it up for consumers, we understand that the redlining and those regulations that we have to comply with them equally and on a non-discriminatory basis. So the way we're handling it is literally to set the minimum balances at a very high level so that we will have to service all the customers who do meet our requirements and are able to meet that minimum high balance requirement.
In follow-up, doesn't setting a high minimum balance essentially draw a red line?
Yes, in a way it does. I understand your point that by only servicing high net worth individuals, by definition, we are excluding those that don't have or don't want to put a high minimum balance with our bank. But that's the way we've set up. We really are not set up to handle consumers. In that regard, we're really very different than Kraken. And we have actually talked to them about, to the extent that we have consumers that do actually want to engage with us, that we will end up probably sending them over to Kraken because they have the compliance staff and the operational staff, including customer service professionals who can serve those customers. You mentioned the FDIC earlier, and I didn't bring that in, but I think it's appropriate to bring it in now. Because we're dealing with businesses and high net worth individuals, we're dealing with balances that are going to be far in excess of the FDIC insurance limit. Brittany's going to talk about this. The statute in Wyoming enables us to get FDIC insurance on an optional basis. We're not sure the FDIC would allow us to become an insured bank because of digital assets, our involvement in digital assets. But at the end of the day, if it turns out that our customers do want that for some reason, we're not averse to becoming FDIC insured. And again, Brittany will share some of that. We recognize at that point that would bring in even more regulations with which we have to comply. And so we would have to staff up if we were to do that. But it is not, to be clear, it's not in our business plan right now. And only if our customers demand it does that become relevant. I'm used to working with corporate clients who spend a lot of time understanding the counterparty risk of their banks because the deposits that they have on deposit far exceed the FDIC insurance limit.
Okay, thank you. One more question, somewhat similar but different. I guess in reading the little bit that I read here, we talked about ACH disputes, or you talked about ACH disputes are identified as a problem for faster payments due to the dispute process. Traditional banks are subject to, as we talked about, CFPB laws that protect them from fraud and bad actors. In the event of fraud or bad actors that do not, or merchants that don't act in good faith, how does what you're doing protect the customer, the consumer? Doesn't matter what their deposit base is. How does it protect the end consumer? And I guess what I'm getting at is as you speed up the process and as you suggest, remove the ability to claw back the ACH, if you will. Oftentimes, time is what helps to determine when fraud has taken place. And if you eliminate that mechanism of time, how do you protect the consumer, or how do you propose to protect the consumer?
Sure. I don't think consumers, as we think of consumers, will be actively engaging in what we're doing. We're working with sophisticated customers who have their own armies of attorneys and internal processes and controls before they're able to release a payment. And it's also worth noting that this isn't, what we're doing is not in lieu of, it's in addition to existing payment systems. So the challenge with ACH, especially in the digital asset world, as you allude to, is the fact that those payments can be challenged and clawed back. But in the corporate world, that is not something that they're used to dealing with. The corporates are interested in a faster payment process that gives them settlement finality because they know who their counterparty is, and there really isn't going to be fraud in the very large corporate payments. That's all. Both sides, both banks involved will, of course, had to go through Know Your Customer and the OFAC, Office of Foreign Assets Control, analysis of the customers. They will know the identity of the customers, and therefore there really isn't the fraud problem that there is in the consumer world. And as a result, when a customer wants to settle the transactions quickly, which if you think about it, and you'll hear from the Ford team today, some examples of mission critical payments. These are high value payments that go into a black hole, and it's very hard to trace them until they come out the other side. And if they don't come out the other side, that's when everybody's got problems. Those types of payments, given the mission critical nature of them, are payments that are very appropriate for a fast payment settlement system that has settlement finality. Whereas a smaller payment, paying for this bottle of water that has a consumer involved, probably would not be. So this is not in lieu of ACH. This is in addition to where customers elect to have a payment that goes through faster and with settlement finality, because the delays in settlement finality are what create the problems. And the digital asset world is very attuned to all this. For those who are experienced in foreign exchange, you'll recognize that this is something called Herstatt risk. The foreign exchange market used to work on sort of a gentleman's agreement that they were going to settle, for example, the next day. And that is exactly how the digital asset world works, that trades happen and then they agree to settle within 24 hours right now. But think about the settlement risk of settling something that is where the underlying settles in minutes and the dollar payment might not come for 24 hours. That's a problem. And so there's absolutely fraud and challenges on the consumer side that the ACH system is designed to solve, but that system doesn't fit very well with what I just described. which is that both counterparties actually want to settle quickly and be done with it and not have capital tied up in unsettled transactions.
So you're suggesting that basically there's a known partnership prior to a transaction is essentially what you're saying? I mean, I think that's the part that I'm struggling with here mostly because in our world, generally speaking, in a non-fraudulent transaction, there's also that known partnership. However, we see corporate account takeover, we see ACH fraud. I mean, most recently, one of the biggest ACH frauds come from the unemployment fraud through the ACH system. And so, you know, I think in the digital world, and maybe you can tell me, but one of the largest risks that we have is fraud. And so everybody's on our side as a bank, on your side as a bank, has great intentions, but in the event that fraud happens to rear its ugly head in your organization, and you have now a fraudulent actor and another partner on the other end making a $1 billion transaction or multi-billion-dollar transaction versus a $50 transaction that we would typically see, that's where, you know, I understand that you're telling me that, you know, we've got two people, but we always think we have two people. You know, if we don't believe that, then we have red flags naturally that kind of prevent that transaction from happening. And so if you could maybe help me understand, how do you prevent that fraud?
Yes, the most important aspect to prevention of fraud is understanding the identity of who's actually putting in that instruction. And Brian is going to spend a lot of time talking about how we authenticate customers and verify that the instruction that they're giving us is actually legitimate and actually did come from them. And so that is how we know. This is a problem, you're absolutely right, in payments. I literally almost lost the wire transfer for selling my house when I moved to Wyoming because there was a fraudulent actor who was in control of my law firm's email server. And I thought the emails were coming from my lawyer. They were coming from his email address, but not from him. And in fact, I got to know the FBI office here in Cheyenne reasonably well as a result of all that. So I'm very familiar with that experience, having almost lost that wire transfer. And a big problem was that the authentication of my law firm wasn't legitimate. And so the levels of security that we're going to be going through are I think, going to help give you comfort that the instructions that we will have from customers when instructing us to move a digital asset on their behalf, and even the US dollars, our authentication is going to be much more difficult precisely because of the fact that we are a digital asset bank, which is another reason why I think we probably wouldn't be looked at as a competitor even in the high net worth individual market for US dollars. We talked earlier about us not being able to pay interest. We're also going to make the customers jump through extra hoops to authenticate that they are who they really are in order to accept their instructions for moving any type of asset, especially digital assets, but also US dollars, because it's all going through the same portal with the same authentication.
So, and last question. So as you ask them to jump through those hoops, that is not counterproductive to the speedy payment process? I mean, it seems somewhat counterproductive, I guess.
That's a very good question. There is absolutely a tension between ease of doing business and security. And we are hopefully going to get that right in the way that we've designed that. And Brian can go into some detail about that. We may want to take some of that into executive session because it does get us into the IT architecture and security design. But you're absolutely right. In digital assets, there is no lender of last resort. So if that Bitcoin is lost, it's gone. And therefore, the levels of hoops that you have to have customers jump through by definition are higher. There is no ability to borrow at the discount window at the Federal Reserve because they only lend in dollars. And so that lender of last resort function is not there. It is in that regard a very different market and a very different system that is likely to be coexisting with the existing ones. The questions you're asking are also very good questions related to the real-time ACH payments. As you know, there's an initiative in real-time ACH payments, and then FedNow. We haven't talked about that. Ivanti, and there's a whole movement for central bank digital currencies, as I'm sure you're aware as well. China has already got its pilot program pretty far extended out into the Chinese economy for its central bank digital currency. And of course, one of the benefits of digital currencies is that the transactions can be traced. So you always can tell where the money went. You just can't necessarily go get it as a result of that, because it's going to what's called a public wallet, a public key address. And I will say, by working with law enforcement, that it's pretty easy to figure out where those coins went. One example that Chuck will be talking about is the Twitter hacker. The Twitter hacker in July was, the digital asset industry knew within minutes who that Twitter hacker was, because it turned out that the hacker had used a digital asset exchange. And all of the digital asset exchanges have to comply with FinCEN's requirements. They do Bank Secrecy Act, anti-money laundering, OFAC analysis on those customers, and they knew within minutes who that Twitter hacker was. So it's just a different group of problems and a different level of fraud. The old frauds, literally, if you think about it, think about back to vault cash. 100 years ago, the frauds were different than they are today. The frauds 100 years from now are going to be very different than they are today as well. It's a different level of fraud, but we can at least trace where those assets go. And once you know where those assets went, as the FBI has proven in a couple of the stings that they've done, they actually can figure out the IP address. And once you can figure out the IP is Internet Protocol, once you figure out the IP address, ultimately, you're very likely to be able to connect it to a person.
Thank you.
Yeah, thanks.
I know we have a question. Excuse me, I know we have a question from Bob. He can see us, but he can't talk, correct? Yeah. Okay. Oh, it's a short one, too. Yeah. For Ms. Long, thank you for your excellent, innovative testimony. I know we will discuss Aviat in executive session, but you mentioned in passing parties attempting payment transactions in other states that do not have Wyoming's legal infrastructure. Can you elaborate on the problems that have arisen from other banks attempting to complete payments and depository transactions in states without Wyoming's laws, which, as you referenced, address the legal statutes of digital asset transactions? Have there been problems beyond the one you referenced about having to settle with multiple parties at once? Also, can you address the shortcomings of stablecoin, which I understand it attempts to complete a proxy for payment transactions using a fiat device as tracking mechanism? Thank you.
Yes, those are good questions. Yep.
If you want to look at it.
Oh, no, that's fine.
Thanks, Bob.
Yes, so a couple of good questions in there. One thing to highlight is that Wyoming did jump out ahead of other states on clarifying the commercial law treatment of digital assets. And that is what Mr. Grady's question is alluding to. So what does it mean that other states haven't done that yet? It's a huge advantage for Wyoming. Frankly, it's the most important thing that Wyoming did in the blockchain initiative, is literally just categorize digital assets and map them to existing commercial law categories. And what I'm alluding to here is, are digital assets securities? Are they money? Are they commodities? Are they something entirely different? These are questions that have not been answered anywhere else in the United States except for Wyoming. Now, all intermediaries can use something called the Uniform Commercial Code, Article 8, and consider a financial asset to be a financial asset under the definition of Article 8. And indeed, that is, when two intermediaries are transacting with each other, that is very clear that the law applies. And so any type of financial asset, including a digital asset, could fall into that category. The challenge becomes when an individual who is not an intermediary is involved. And that is where every other state's law is unclear, and that is where Wyoming's laws are clear. Now, you may be thinking that's not that big of a deal, except 75 to 80% of digital assets are owned by individuals. These are bearer instruments, and the individuals own them outright themselves instead of having them deposited at an intermediary. So there is a legal gray area for institutions operating outside of Wyoming, precisely because if there's an individual involved in a transaction, it is not 100% clear that the legal status of that transaction is enforceable, and it's not 100% clear what a judge would do in the event of litigation involving a transaction where an individual were involved in digital assets. So I think where Mr. Grady's question is going is, what does that mean for the digital asset industry? Right now, it is operating in a legal gray area. This is part of the reason why Wyoming has added so much value, and the biggest request that the digital asset industry had was just clarify things. We can operate in a clear legal regime as long as the legal regime is properly defined. And Wyoming, to be clear, did not change its Uniform Commercial Code. It just created an appendix to map digital assets to the existing categories. So now we know judges have a roadmap in the event of a dispute. Luckily, there haven't been that many disputes, but to the extent that digital asset values go up, you're going to start seeing a lot more of them. Most people in the digital asset industry, myself included, have just taken our losses and moved on. But to the extent that more value is involved, to the extent that we see a failure of a company like a Mt. Gox, there will be a lot more litigation in the future. And it's part of the maturation of the industry to enable us to get to that point. But the Krakens of the world, the Coinbases of the world, they're all taking some legal risk in doing business with individuals in digital assets in a state that does not have Wyoming's laws. Last comment, I am working with the Uniform Law Commission. I've been appointed an observer on their program. You may be aware they're actually looking at rewriting the Uniform Commercial Code to allow for electronic transactions as a general rule. It's not just digital assets. It's also all kinds of electronic transactions, including what you have to deal with on a daily basis. There's a reason why you need a photograph of the check that's being deposited. And it's because the check actually has to be in writing. And those laws are very antiquated. They figured out a way to comply with them by allowing a paper copy, a photo of the check to count as if it were in writing. But the commercial laws in the United States are pretty antiquated. The Uniform Commercial Code was written in the 1950s when everything was in paper form. And as you're aware, anything that's in intangible form, if you're trying to lend against that and perfect a security interest in it, it goes into a catch-all bucket that's not easy to search to see if there's a lien on that asset. What's unique about digital assets is the data is itself unique. It cannot be replicated. And once the data is unique, then it can become a collectible because it can't be replicated, just like a piece of fine art. It's a collectible and it's scarce. And then that scarcity is what gives it value. So now we actually have the technology to be able to make it clear that data itself can be owned. And when data can be owned, it can be controlled. And when it can be controlled, then you can lend against it and know exactly that you have an enforceable lien against that asset. That's what's been missing in this whole question of electronic instruments in all of the financial services world. So we have the ability now, thanks to blockchain technology, to make data unique, and that's going to enable a lot of things, including the traditional banking industry over the next decade or so, to finally move to a totally virtual paperless world, including in mortgages and checks and all the paper that you're used to dealing with. Last comment, the Uniform Law Commission is expecting to release its Model Act in the summer of 2022. So Wyoming is literally 4 years ahead of the rest of the United States. And it's been fun to watch. In the beginning, there were critics because they don't like it when states jump out ahead. Wyoming has a long history of jumping out ahead, as you know, and they were initially critical of what Wyoming did, but what's been fun for us from Wyoming to participate in their process is to realize how much they're moving exactly in the direction Wyoming moved. And so I think when you see the uniform law, it won't be difficult for Wyoming to conform what we've already done to the uniform standard. But what we got in exchange was we jumped out ahead, and so it was definitely the right thing to do. Mr. Grady also asked about stablecoins. I'll give a shorter answer to this. Stablecoins are not what Avid is, in part because Avid is not using any of these unique Wyoming laws. The Avid relies exclusively on existing laws, so there is no potential conflict of law pertaining to Avid versus other states' laws, because we figured out how to structure it so that it fits right up the middle of the fairway with existing laws. Stable coins are a perfect example of something that has no legal clarity. And Avid is not a stable coin, but to be clear, it uses the same technology. It just has a very different legal structure, and as a result, a very different treatment under accounting and hopefully, well, I can't give accounting or legal or tax advice here, but we've been told a very, very different and much more favorable legal and accounting and tax structure than stablecoins. And last comment on that, if you look at the stablecoin USDC, which is the institutional dollar stablecoin, on its website is a very big disclaimer that says that they are not sure that any transaction involving a USDC is legally enforceable anywhere in the world. And so we are trying to solve that problem with our product because Avid is using existing laws. Those stablecoins fall in between those buckets where you don't really know what they are legally.
Mr. Grady does have a follow-up question. What about stablecoin? Is that the transaction enforceable? Is the transaction enforceable if it is just being tracked by a fiat device?
Yep, I think I just answered his question. Yep, I think so. And this is part of the reason why traditional institutions can't touch stablecoins, because they don't know if they're legally enforceable. A good attorney reading, well, frankly, I called out USDC for having that disclaimer on its website, but to be honest, I don't mean to call them out because I think they just had a better attorney who was more careful about warning about the risks. Every single existing stablecoin, including, by the way, when Facebook issues Libra, it's going to fall in that gray area, and no one's really going to know if it's legally enforceable because the laws don't exist in the United States to create something that is legally enforceable unless it's issued by a bank using the structure that Abbott is proceeding with.
Ms. Long, thank you for your testimony. I don't have any questions at this time.
Thank you.
I don't have any questions either.
Okay, thank you.
Can we do a follow-up then here?
Yes, please.
I apologize. I'm the new guy. Thank you, Mr. Chairman. So I'm back to stable coins, and maybe this is not a question for this point, but maybe something more for an executive session. But there is the Gemini dollar, for example, which is a stable coin issued by Gemini New York Trust with dollars backed in State Street Bank, a federally insured normal bank.
Yes.
Can you compare an Avid to a Gemini dollar so I can better understand a competitive advantage, or is that an unfair question?
No, it's not an unfair question. It doesn't get to the proprietary nature So at a high level, I can answer it in the public forum, and then we can, of course, follow up if there are additional questions. Yes, so Abbott has a really important advantage that is critical to figuring out how to make all these things work, which is that you have to have the software and the payment system under the same legal entity if you're going to have the settlement settle at the same time as the digital asset. The problem with having the issuer of the stablecoin having the dollars deposited at a different legal entity is that you now have created a sequential settlement. You can't get it done at the same time. This is one of the big advantages of having a digital asset custody business inside of a bank. And it is the reason why stablecoins, frankly, should all be issued by banks if they're really going to go mainstream, because you can't maximize the value of the software if the US dollar leg of the transaction has to settle in sequence in a different legal entity. You can't settle them at the same time. One of the issues that the United States has had in the development of this market is that banks can't custody digital assets due to the federal restrictions, and digital asset companies can't settle payments at the Federal Reserve because they're not banks. So you're in this circular situation where you're required to have the digital asset and the US dollar in two different legal entities. And as a result, you can't offer what Ivanti is offering. That's the secret sauce. Frankly, I think this is also, it's not just a digital asset point, although I know your question was a stablecoin point. There's a reason why the fintech companies, the financial technology companies like Square, like Vero, like GECO are getting bank charters, because they realize that you cannot have a software company that maximizes the value of their payment software if it can't also settle the US dollar payment at the Federal Reserve. And so this is ultimately why I think the financial technology companies that built very sophisticated front-end payment software are now skating towards where the puck is going to be, as opposed to where it is today, which is that they need to marry that software with the ability to settle the payment at the Federal Reserve. Thanks.
Are there any further questions from the board? Mr. Dykeman, in light of the board's questions, do you have any additional areas of inquiry with this witness?
No, I do not.
Thank you, ma'am, for your testimony. Mr. Chairman, may I suggest a brief recess at this time? Thank you.
Okay.
We'll be in recess.
Thank you. Thank you.
Rescind the stipulation.
I'm getting all impression